Markets in Asia saw decent losses on Monday as countries continue to impose lockdowns to curb the spread of the coronavirus. Australian Prime Minister warned that a lockdown could stretch to 6 months. New Zealand, where the number of coronavirus cases exceeded 100, imposed a similar lockdown. Australia's S&P ASX 200 index closed 5.62% lower, and New Zealand's NZX 50 closed down 7.59% lower. South Korea reported the lowest number of new cases on Sunday at 64. Kospi was down 5.34%. The Hang Seng Index in Hong Kong ended the day down 4.9%, while Shanghai shed over 3%. As such, equities continued to bleed despite massive economic stimulus efforts worldwide. The negative sentiment was fueled by the fact that Goldman Sachs, Morgan Stanley, and JP Morgan Chase have all forecasted a drop in U.S. GDP. Late last week, U.S. lawmakers failed to agree on a $1 trillion emergency package to help the American economy amid the virus outbreak. The global death toll from the virus has surged past 14,400. European stocks closed lower on Monday as countries continue around the world to wage battle against the coronavirus. The Pan-European Stock 600 finished down 4.4%. The U.S. Federal Reserve said that on Monday will launch a barrage of programs, including limitless asset purchases, which caused stock futures to pare back early dramatic losses. On Wall Street, Dow Jones Industrial Average hit its lowest level in 3 years earlier in the session, before trading down around 620 points. The S&P 500 fell around 3%, and the Nasdaq Composite was 1.3% lower. Nevertheless, a slew of new stimulus measures from the Federal Reserve provided a boost just to pre-market trading and failed to help the stocks end the regular trading day higher, in part after the Senate failed twice to pass a true $2 trillion coronavirus rescue package. On Monday afternoon, Democrats blocked the bill for the second day in a row, and lawmakers clashed on the Senate floor as strained negotiations dragged on. In other markets, the dollar was mixed and fairly volatile against the majors. The Euro-USD switched between gains and losses and finished marginally higher on the day due to a weaker dollar following announced massive stimulus package by the Federal Reserve. As such, the pair climbed back above 1.07 and preserved a bullish bias early on Tuesday. However, the euro may lose its steam and give up intraday gains as the upcoming preliminary Eurozone PMI is likely to disappoint expectations. The US dollar Japanese yen extended gains to 111.60 and retreated to the 111.20 area by the end of the day. Today, the pair switched into a corrective mode as the Federal Reserve has announced a buying program of expanded assets. However, the prices may range in the positive momentum as soon as the dollar traders digest the Fed's stimulus package. Now, the immediate support for the USD JPY pair is at 110.00. As for oil prices, Brent managed to stay afloat and even climbed higher marginally after the Federal Reserve rolled out an extraordinary array of programs to support the economy. Also, a $2 trillion coronavirus economic stimulus package remained stalled in the U.S. Senate on Monday, but U.S. Treasury Secretary Steven Mnuchin voiced confidence that a deal would be reached soon. The statement was supported the oil market as well and pushed the greenback lower. Early on Tuesday, Asian stocks climbed from multi-year lows and U.S. equity futures rose, bolstered by yet another Federal Reserve stimulus aid and an economy battered by the coronavirus epidemic. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.